back. The market's not doing much. The Nifty absolutely stable at this point of time with gains of 13 points. 85.55 is where the Nifty is trading. The Sensex is high by about 57 points. Stable, not seeing a lot of profit taking, at least in the first hour. Now, Capital First has raised 300 crore rupees via a QIP issue. We spoke with V. Vedanathan, Chairman and Managing Director at Capital First, and we began by asking him that now that the QIP is done, what was the response to the QIP and what was the pricing of the QIP?
First of all, yes, I'm very happy to announce that we successfully closed our QIP. We raised Tier 1 equity in the, of rupees 300 crores, and we raised it at a price of rupees 390 rupees a share.
So what was the response to the QIP, and what's the capital after this?
The capital adequacy after this transaction will go to 23.5%, and at that sort of capital adequacy, certainly for the next 2 or 3 years, we don't see the need for raising any additional capital. To your earlier question about the response, we got a really good response, both from foreign investors as well as from domestic investors, and we will be allocating 50.3% of the equity to foreign investors, who are all reputed marquee investors, and again to Indian investors who are reputed and marquee, we will be allocating 49.7%.
And what's the quality of the shareholders in the book?
Yes, these are all long only funds, and which is one of our priority for us when we were raising equity. I'm happy to say that our shareholders now include Goldman Sachs, HDFC Standard Life, who already had a position in the company, have taken a further position, and Birla Asset Management. So really very, very high quality names that we have, and we hope that their support will stay with us for a long period of time.
When you went for the roadshow, what was the pitch to the investors?
We are actually in an extremely unique space and a large space actually, because we believe the financing for the consumer and financing for MSME is a very unique space, and the growth of the company has been quite good. In fact, the company's loan book was only 930 crores in 2010, and we are already 11,600 crores. So with that sort of a growth trajectory, we are quite confident of growing about 25% a year for the next couple of years, and the profits number should look even better. So I think the fact that the company has really strong shareholders, the fact that the company is a good space and is well set, these were clearly the pitch factors.
When you said this fundraising will take care of growth over the next 2-3 years, did you mean robust growth?
Yeah, like I said, about 25% is a fair expectation to have for the next couple of years. But in terms of profit, actually, this year's profit, for example, for the coming year, we expect to in fact increase by over 50% over what we expect to post in 2014-15. So that should actually give us a sufficient capital for growth as well. So for the next few years, I think we are quite comfortable from here.
Over the last 3-4 years, the company has completely changed. How is it now different? What was the consumer finance business earlier and what is it now?
See, this company, Capital First, had a loan book of largely on the wholesale financing, which is lending to developers maybe 4 or 5 years ago. Right now, 85% of the loan book of the company is lending to consumers and lending to small and medium enterprises. We have financed over 1 million customers in the last few years. So the nature and character of the company has substantially changed towards the consumer. And as far as consumer is concerned, it is it's a large market, it's an evergreen market. I know of late for the last maybe 1 or 2 years or so, consumer business has been rather tepid. But at the core of it, this is very much a growing business and a large market. So, car sales, for example, two-wheeler sales, for example, and durable financing, these are all businesses that will continue to grow in the years to come.
But talking of the segments, housing is slowing, auto sales are slowing. Where are you seeing a pickup coming in the next 5 years?
See, there are 2 factors that fundamentally drive consumer businesses. One is the interest rate scenario. Number 2, the confidence of the people in terms of growth and jobs and so on and so forth. So really, if you take the next 4 or 5 pictures, I think really a really fantastic time is approaching in India, because simultaneously interest rates will come down and simultaneously growth rates are going to pick up and more jobs are going to get created. And I think together as a combination of these two, next 4 or 5 years is going to be phenomenal for the consumer business. business. If you see the auto sales number for February, they were up 7%. And I think that if you check out the SIAM numbers and the SIAM projections, they are all looking like high single digits for the next year. These sort of numbers are not seen for the last 2 or 3 years. So I think that whether home sales, car sales, durables, two-wheelers, they will all grow for the next 4 or 5 years. So therefore, to compound, to assume that the financing companies in this space will grow about 20-25% is a very reasonable expectation. That's a good growth.
When it comes to credit growth on the MSME side, has that been slow?
Yes, at a corporate level, as in the wholesale financing business, as you know, in India has been pretty tepid for the last 3 years. And you saw the numbers that came a couple of days ago, just 10.1 or 10.2% was the growth, which is not good at all, the non-food credit growth. But at the small and medium enterprises level, I think that significant developments will happen in the next few years. One is that with the growth coming back, the direct and immediate impact will come to the small entrepreneur, because as the businesses grow, more demand and more production will come to the small and medium enterprises. That is one big play. Two very big play happening will be interest rates. Next, I think in the next year or so, interest rates will come down definitely by about 50 to 75 basis points. You can see banks have already started dropping the deposit rates. Maybe the lending should be around the corner. So lower interest rates, GDP growth, SME business will do really, really well. So again, like I said, when we look at the future, growth is not a concern at all. Growth will come. We are more concerned about ensuring the credit quality is good, the corporate governance is good, and the broad fundamentals of the foundation of the company are stronger.
Now, you've been part of the banking industry previously. When do you see corporate demand picking up?
See, whenever the interest rates come down, the first impact actually comes on the consumer side, because the consumers typically tend to buy a home or a car. The corporate demand has a lag of maybe between 9 to 12 months, but I can clearly see that coming. If you see the big announcements made by this government in terms of, the smart cities and, investment in infrastructure, investment in housing, we heard of 70,000 crore investment earmarked in the budget. After all of that will go for creating roads. All of that will go to create the infrastructure. All that will convert, and I think we should not be despondent at all. Next 1 year, I do feel that many of these things will bounce back. People may say that not much has changed on the ground, but I think the lead period is getting used up, and I think definitely 1 year you should see growth. You should not be very disappointed.
Do you expect a rate cut on the 7th of April?
Well, I think, we were expecting too much in the last, if at all we expect any reduction in the last policy, we're expecting too much, because just 10 days before that, they had cut it by about 25 basis points. But I think, therefore, in the days to come, whether this policy the next, certainly we should be expecting further rate cuts, because if you see at a global level, of course, you could be worried about the fact that, US may raise interest rates sometime, but at a domestic level, which is a very significant portion of our story, you will see that the inflation is tended down quite significantly, quite stably. There are no shocks, there are no jerks. The current account deficit is under control, fiscal deficit is under control, oil is under control. There is no fundamental reason why you should be concerned now. It's only a matter of time. You might have to wait for one policy or two, maybe 3 months to 6 months, but you will definitely see it happening.
That was Nathan of Capital First talking about the QIP issue as well as the pickup they're expecting in consumer finance. We'll slip into a break at this point of time. When we come back, we'll be joined by Yogesh Radke of Edelweiss Capital.